Hey, what's up, guys? Welcome to another video, another real estate video. My name is Aldo Gonzalez. I am a real estate agent here in the San Fernando Valley. I'm currently associated with Pinnacle Estate Properties, servicing mostly the San Fernando Valley area, Sylmar area, Northeast Valley. But I could help you get a house anywhere within the San Fernando Valley, Santa Clarita Valley, Glendale, Burbank, Ventura County. I'm here to serve you, here to guide you through the process. If you're thinking about selling, buying, have any questions, my contact information is below. I always leave my contact information there so you can reach me. You could text me or send me an Instagram message. My information will be below. Now, this particular video is about closing costs. The actual, how much it actually costs you to buy a house. Now, for this specific example, I'm going to use pretty much the value of how much houses are selling for currently right now here in the Sylmar area. Today is early 2021, February 2021. And I'm going to show you how much it actually costs you to buy a house here in this area. Obviously, when you decide to buy a house, you know you got to save money. As low as 3.5% and as much as 20%. But some people don't realize you actually have closing costs. There's closing costs involved on top of purchasing your house. So I'm going to break down in this video. We're going to go into my computer right now, and I'm going to break down. We're going to do a screen share so you can see the actual cost of buying a house. And like I said, for a specific example, I'm going to use I'm going to use the example of the average price here in Sylmar, which is around $630,000. So with that being said, let's go up to my screen and I'm going to share with you the actual closing cost if you want to buy a house in this particular area, how much it's going to cost you on top of your down payment. So let's go to the video. Okay, guys, I'm back. Now, for the sake of this example, I'm going to use a purchase price of $630,000 so you guys get an idea of your closing cost for a house that you're going to purchase for $630,000. Now, the reason I use this amount is because I work the Sylmar area in the San Fernando Valley. I'm more familiar with this area, and this is the price. How $630,000 is the actual price homes are going for in this area on average. Okay, so let me give you an example actually of the prices, how much they gone up the last year. Right now, as we can see here, $630,000 is how much the houses are going for right now, as of last month, January 2021. I'm sorry. A year ago, in 2020, they were going for $550,000. Right now, they're going for $630,000. So this is why I'm using this example as for closing costs. Okay, just so you guys know why. Now, closing costs could be broken down into 4 parts. Okay, and we're going to go over those parts right now. Now, the first one is loan charges. The second one is impounds, your impound charges. There's also title fees involved, and there's also miscellaneous fees involved, and we're going to go over those right now. I'm going to go over these the best way that I can. I hope you understand. I hope you can see what I'm showing you. So let's go. Let's see. Let's give you an idea how much the closing costs are for a home for $630,000. Now, disclaimer: your closing costs vary. One, type of loan. So depending on the loan you get, it's going to vary as far as closing costs. Also, type of home. For this example, I use single family residence. Okay. Now, if you're buying a townhome or a condo or a home within a community where they have HOA, there's also HOA transfer fees. But for this example, we're not going to do that. This is just a single family residence, and we're going to use this as an example of your closing cost. Okay, like I said, they're broken down into 4 parts. The first one I want to talk about is the actual the title fees. The title fees involved when you buy a home. Okay, now as you can see here, I got this example from First American Title. I'm able to get data from them. And the title fees involved for a home for $630,000. The first one is escrow or title settlement fee. Now, for this example, is $1,473, like $1,500. Now, the settlement fee is actually more than that, but the buyer pays 50% and the seller pays 50%. So the settlement fee for this particular home is close to $3,000, but it's just divided in by two, and the buyer pays his part and the seller pays his part. Okay. Now, on top of that, there's owner's title policy. Obviously, you as a buyer, you're not going to pay this. The seller pays this. This is why it's zero here. There's a lender's title policy, which is what you got to pay. So it's pretty much ensuring. It's a lender's title fee that needs to get paid, ensuring the loan. And what else is within this area is also part of the title fees that you got to pay. Okay, notary fees. Service fees, usually you get charged by the escrow company or the title company. The travel notary or the notary has a fee that they charge you for them to notarize when you sign your loan docs. So that's about. There's also a sub escrow fee here that you got to pay, $125. So this is pretty much your closing cost fees as far as title. Now, the second part of fees that you also pay, and I hope they're all here, which they are loan your loan fees. Okay, your loan charges, how much it's going to cost you to pretty much how much the loan is going to cost you, and these fees are broken down right here as such. Okay, now there's an origination fee. Now for this example, they're using 1% of loan amount. Now, and because you're giving 10% down in this example, you're going to finance $567,000. 1% of $567,000 is $5,670. So this will be your origination fee. On top of that, there is also a processing fee. For this example, the processing fee is $450. There's a tax service contract fee. Don't really know what that is. I got to talk to a lender to get a better idea of what that is, but it's something that they charge. I think it's, I guess, the fee they charge, the tax fee they have when it comes to getting the loan. There's also a document preparation fee, which is $450. There's an underwriting fee of also $450. Like I said, this is just an example. The fees vary per lender. So when you talk to a lender, always you got to ask for three things. For these three things, ask them how much is your processing fee, your underwriting fee, and your processing fee and your documentation fee. Documentation fee, processing fee, and underwriting fee. Ask them what those fees are because they vary per lender. Some are more expensive. Some vary. They also vary per type of loan that you're going to get as well. Okay, so on underwriting fee, there's also an appraisal fee of $500. Now the appraisal fee, in some cases you pay out of pocket. Sometimes you got to pay a check up front. Sometimes they include that. The lender pays it up front and then they charge you at the close of escrow as part of your closing costs. So it varies. Every lender is different. They have different criteria and guidelines involved as far as how they charge for appraisal. They're also going to charge you for your credit report. So on top of, so this is pretty much all your fees involved, origination fees for your loan. Not your loan chargings, your loan fees, which is origination fee, processing fee, tax service contract fee, document preparation fee, underwriting fee, and appraisal fee, and also the credit report. Now, the next part of the other fees that you have are right here. This is what I call your miscellaneous fees. Okay, and now if you're watching this video, these fees apply to LA County, LA City, San Fernando Valley area. Every city is different. Every county is different. They have different fees when it involves to closing costs. Now, so home warranty fees is something that you, in this particular market, you as a buyer most likely are going to pay. Because right now we're dealing with a very aggressive seller's market where a property goes on the market one day, within 5 days or within 2 days, they already have 18 offers on the table, and they're very good offers. So in some cases, buyers are not asking for the seller to pay for the home warranty. In a more, I guess, less competitive market, in a more balanced market, in a less aggressive seller's market, you are able to ask for the seller to pay for your home warranty. But right now it's coming out of the buyer's pocket, and so you're actually paying for the home warranty. Other miscellaneous fees involved are like the flood cert for $25. Endorsement fee is actually charged by title. I think they just it's an endorsement fee that they charge. I think when you sign your loan docs out of their office. I can't be 100% positive in that, but they do charge it. Again, your notary fee, which we talked about earlier. Loan servicing fee, which they may charge as well. This is for the title company as well. And what else? They also have a sub escrow fee, a recording fees of $225. So adding these fees and what on the left column that you see here, these closing costs are your loan charges, your title charges, and your miscellaneous fees. Now on the right column right here, these are your prepaid impounds. Now prepaid impounds, I'm going to get my calculator out right now. Hopefully I'm able to explain. Hopefully you understand what I'm about to explain as far as how they calculate your prepaid impounds. Now, when the lender requires the following, okay, they want to make sure your home is insured at the close of escrow. And not only that, they request up to 15 months in advance of your homeowner's insurance premium. Meaning, for the example we have here, they're asking for $3,150 in homeowners insurance. Okay, now if we divide that by 15, it's going to give me the amount monthly. 3,150 divided by 15. You're paying around $210 a month for your homeowner's insurance. Now, this is just an example. Your homeowner's insurance also varies per property, per location. There's hazard insurance. Different areas of the valley, of the city, are high-risk fire areas. So it's going to vary as far as how much they're going to charge you for your homeowner's insurance. But this is just an example of $210 per month. So what they do, they multiply that by 15, and they want to collect 15 months in advance for your homeowner's insurance. They're collecting the premium plus. They're collecting your 1 year's premium plus 3 months, and they want you to put that in escrow before closing. Okay, they're collecting that upfront. They're also collecting around 3 months of your property taxes, which is up here. Okay, now they want to make sure that they want to make sure they start with enough money to pay your taxes come next year. So they're gonna, in this example, I think they're asking for 3 months of prepaid taxes. So what they're doing in this example right here, in California, actually in LA County, LA area, your average property tax is about between 1.25%. Let's do the math on this property. This property is for $630,000. You are going to multiply that by 1.25%. So for this property, for this property, your property tax is $7,875. Now we're going to divide that by 12 to get an idea. 78.75 divided by 12. So this is how much you are paying a month in property taxes, $656.25. Now, if I multiply that by 3, it should add up to this number, $1,968.75. So the lender is asking for at least 3 months worth of property taxes up front, so they could start already padding your impound account, which is pretty much you're going to pay your taxes. If you have an impound account, your property taxes are included in your mortgage payment. Okay, so this is also a cost up front. Okay, now if we add up, now because this is a conventional loan, they're also going to request at least 2 months of PMI. In this example is $737.10. Now PMI is called private mortgage private mortgage insurance. Whenever you give less than 20%, most likely you're gonna have private mortgage insurance. Pretty much, this is insurance on the loan. The lender, you're paying for you're pretty much insuring the loan for the lender. Whenever you give more than 20% down, there is no PMI. So the way you get rid of PMI is either give at least 20% down, or when the property goes up in value at least 20%, or it's worth more than goes up 20%, you're able to have that PMI removed, or you could refinance and get a new loan removing the PMI once you have more equity. The way you could also pay off, you could also increase your equity by paying off your loan. So the more you pay, the faster equity you gain on the property. Anyways, that's a different topic. That's a different video. But they're also collecting PMI for 2 months, and in some cases, depending on when you close, they're gonna collect interest. So that's for another video. But the moment you close on your loan, you're being charged interest no matter what. So in some cases, you might close in the middle of the month. Say you close February 15th, but your next payment is not due until April. So April 1st, you're still, from the time you close, those 15 days, 15 days, which is, I guess, the mid-February, like say February 14th, all the way to February 28th, there's interest right there that you're being charged ahead of time until your next payment, which will be April 1st. So they're including the interest from the time you close escrow to your next payment. I hope that makes sense, okay? I got to break that down for you guys in more detail in a different video, but they're also collecting, I guess, on the days of interest until your next payment. So from the day you close, the days of interest into your next payment, they're collecting that upfront as well. So they want to make sure they have enough funds to secure, I guess, your loan into your next payment. Okay, so adding up all these fees, left column closing cost, which is $11,648, with the right column closing cost is $7,249. Your total closing cost, okay, for this particular property, $630,000 in the LA area, San Fernando Valley, Sylmar, you're looking at. Let's do the math, guys. Let me see. Bring this up so you can see. 11,648 plus 7,249. That's 18,897. Now let's divide this amount by the actual purchase price, so you get an idea of what percentage of this is closing cost. Okay, divided by $630,000. So this is actually close to 3%. For this particular property, you're paying close to 6% in closing costs on top of your down payment. So most people think you're using your down payment to buy a house. No, you need down payment plus closing costs. Now, in different markets, there's different ways to negotiate the closing cost. You could request for the seller to pay for your closing cost. Right now, it's recommended, but most likely it'll be kind of hard for you to get the total amount paid by the seller. It's non-negotiable. And in some cases, you might have to increase. If the house is for $630,000, if you want closing costs, you might have to make an offer probably for $600 or 3% above $630,000, so they could give you credit back. Right now in this market, that's not going to make your offer stand out in this aggressive seller's market. But the option is there. So that I recommend you talk to your real estate agent. You talk to your mortgage broker to determine if they recommend you ask for closing costs credit or seller's concession to pay for part of your closing costs or all of your closing costs. It all depends. Now, like I said, I hope you found value in this video. My goal here is just to inform you, educate you, guide you through your home buying process, and just pretty much to help you. So if you have any questions, feel free, leave a comment below. If you like these videos, it will mean a lot to me if you just subscribe. Click on the red button below and subscribe. Hit on the notifications button as well, so whenever I make a new video, you are notified that I just posted a new video. If you have any questions, regarding the home buying process, the wholesaling process, you're looking to buy, sell here within the San Fernando Valley or surrounding areas, I'm your guy. I'm here to help you out. Leave a comment below. Call me, text me. My information is below, or you could also send me a direct message to Instagram. Once again, my name's Aldo, and I hope you like this video. Until next time.